Hello everyone, this is Marshall Gittler on behalf of Claws and Horns. I'm going to discuss the main issues facing the FX market in the coming week beginning 31st of July. The big debate in the FX world, and indeed in financial markets overall, is around three interconnected issues. First off, how strong is global growth? Secondly, what's happening with inflation? And given the answer to those 2 points, what's the appropriate setting for monetary policy right now? The problem is that growth seems to be relatively strong, but inflation isn't responding as it usually has in the past to strong growth. In such a case, what should be the stance of central banks? How should they respond to the current circumstances? The central bank's reaction function has usually been based on the concept of the Phillips curve. The Phillips curve is a way of visualizing the relationship between the unemployment rate and the inflation rate. In the past, it usually happened that the inflation rate rose when the unemployment rate fell. Now, since the unemployment rate is strongly affected by the rate of growth, it was naturally assumed that stronger growth would push down the unemployment rate, push up wages, and thereby push up inflation. That's one reason why stronger growth is assumed to lead to higher inflation. Well, it hasn't all happened like that recently. Here's the US Phillips curve with the unemployment rate on the x-axis and the inflation rate a year later on the y-axis. The US Phillips curve used to work very nicely. Notice the purple dots in this graph, which represent the Phillips curve from 1958 to the end of the 1960s. It worked just like William Phillips said it should, with inflation rising as unemployment fell. But, as the green dots show, the fall in the unemployment rate since the global financial crisis in 2009 hasn't been accompanied by any notable rise in inflation. Now, it just may be that the unemployment rate has to get below 4% for there to be any response. But given that the natural rate of unemployment is probably higher now than it was back in the 1960s, and that inflation is actually falling at this point, I think something's really changed in the relationship. And in some countries, like Japan, the situation is almost inexplicable. There seems to be an inverted Phillips curve in Japan. That is, the inflation rate has actually been falling recently, even as the unemployment rate falls. Now, data like this is really radical. It suggests that the theoretical underpinnings of modern monetary policy are coming apart, that the entire premise upon which central banking is based has undergone some fundamental change due to technology, globalization, or who knows what. It leaves central bankers, and therefore the market, really at a loss about what to do. So, this is the dilemma facing all the central banks. What should the proper setting for monetary policy be when growth is relatively strong, but inflation is still below their targets? We'll hear from two central banks about that question during the week. The Reserve Bank of Australia on Tuesday and the Bank of England on Thursday. As usual, neither bank is expected to change rates. The focus will therefore be on the statement and any changes in their future guidance. The Reserve Bank of Australia, the RBA, held its last meeting on the 4th of July, less than a month ago. The statement following the meeting was little change from the previous meeting. In particular, for the FX market, the final paragraph, which gives the RBA's forward guidance, and the paragraph about the FX market were both unchanged from the previous month. And not much has happened to change the picture since then. The Australian unemployment rate rose a bit, but that was due more to a rising participation rate, which is a good sign for the economy. Inflation slowed somewhat, which could warrant a mention in the comments. As for the exchange rate, the trade-weighted index is up about 2%, but that's quite understandable as iron ore prices are up about 10%. Overall, as this graph shows, the market's expectations for the path of Australian rates over the next 2 years are almost unchanged from before the previous meeting. I'd expect to see little change in the statement in this the RBA's statement following the meeting, and for the currency to be little affected as well. Now, for the Bank of England, there's clearly a lot more debate about what people are thinking. Until the last meeting in June, the market had widely expected no change in rates this year, as shown by the green line here. However, after 3 members voted in June to raise rates, the market quickly priced in a 50-50 chance of a rate hike this year. Now, the pendulum is swinging back the other way, and expectations of a rate hike are falling back. Expectations of unchanged rates are increasing. Now, in his recent speech in Sintra, Portugal, Bank of England Governor Mark Carney said that he'll look at 3 factors when deciding whether to raise rates. First is the extent to which weaker consumption growth is offset by other areas of demand, such as business investment. Secondly, wages and labor unit costs. And third, how the economy reacts to Brexit. Now, while the details of the second quarter GDP figures aren't available yet, the fall in the overall rate of growth suggests that number 1 is a no. Slowing growth in average weekly earnings suggests number 2 is also a no. And finally, the reaction to Brexit seems to be getting worse and worse. A solid no there. So, in my view, I don't expect any golden ticket for rates in Britain this month. I think with Kristen Foster off the committee, we could see fewer votes for a rate hike this month, and as a result, the pound could weaken further. We'll get another view on the Phillips curve conundrum from the U.S. this week as the monthly non-farm payrolls data comes out. There doesn't seem to be any end in sight to the magnificent American jobs machine. The market's looking for an NFP figure of 183,000, which would be exactly in line with the trend, and a further decline in the unemployment rate to 4.3%. But I think the more significant figure may be the average hourly earnings figure. There, the market's expecting it to return to 2.4% year-on growth after last month's blip up to 2.5%. That's the purple line in this graph here. The figure peaked at 2.8% in February and has been slowing since. Again, the Fed wants to see stronger growth translating into higher inflation before it raises rates again. Otherwise, it has a hard time justifying its action. A fall in the rate of growth of earnings would be more evidence that the Phillips curve just isn't working like it should. It could call into question the FOMC's rationale for hiking rates and therefore be negative for the dollar, regardless of what the NFP number is. Other major indicators out during the week include the remaining purchasing managers indices from the smaller economies and the final indices from the Eurozone and the US. The PMIs for China and the UK will be a particular focus for the markets, as they're probably the biggest economies that haven't had their PMIs announced yet. Also, the US ISM index is coming out. As usual, watch the prices paid index that comes out with the ISM manufacturing index, as well as the headline number. The prices paid is a good indicator of future inflation. The second quarter Eurozone GDP data is expected to show accelerating growth in the Eurozone, which could be positive for the euro. Japan's labor cash earnings come out on Friday. This is an important indicator for the country for the same reason that I've been discussing. The central bank wants to see lower unemployment translating into higher wages. So far, no dice. And Canada announces its employment data and international trade data on Friday, at the same time as the NFP figures come out. Finally, there are only a few central bankers speaking, all on Wednesday. Bank of Japan board member Mr. Funo, plus 2 Fed speakers, Cleveland Fed President Nestor and San Francisco Fed President Williams. This is Marshall Gittler for Claws and Horns, bringing you the outlook for the week beginning 31st of July. Good luck in your trading.